So gold prices have hit an all-time high, not just in India but in the rest of the world too. It's that time when I feel that the rings that I have in my ears are actually gold instead of gold plated. I'm joined by Monica Hallan, the consulting editor with our paper Mint. Monica, to what do we attribute these high gold prices? I mean, obviously, there are fears of a trade war between Beijing and the US. That explains the global reaction. But what about India? I mean, what's happening?
We're very much part of the global economy. And whenever there is risk in the air, people rush to gold. So
Right.
it's a hedge against risk.
The safe haven,
So
so
the
to speak.
safe haven. So whenever there is danger to the markets, there's danger to the economy on trade accounts, then people rush into gold. So the trade wars right now is freaking the market out, as well as the fear of a slowdown of the US.
Right.
There is also an additional factor of a de-dollarization of trade. So, for instance, China and Russia are saying, why will we trade in the dollar? Let's trade in our local currencies.
Local currency instead.
Several other bilateral trade is beginning to be in currencies other than the dollar. The dollar has always had this great place in the world of being the medium of
queen amongst,
exchange,
yeah,
the store of value.
Right.
So it's been the international currency, and dollar prices and gold prices are always inversely related, which means if dollar rises, gold falls. If dollar falls, gold rises.
Yeah.
Right? So it's always an inverse relationship. And India is very much a part of the global economy. And when you see central bankers also starting to buy gold, the overall pressure on the prices is there. So you've had a 40% jump in 1 year in gold prices, it's a huge 1 year jump.
So for an investor like me, who's got a lot of money in mutual funds and the equity markets, obviously because of this trade war thing, the equity markets are very wavy and perilous and everything else. But what does one do? I mean, should I take out that money and push it into gold? But I mean, buying gold also is now way out of my bounds given the prices.
No, and also, why do you want to buy last year's winner? So 1 year, I just said 1 year, you have a 33, 35, 40%, depending on which time period you're choosing. But let's say it's been a 30% jump in
Correct.
gold prices.
Right.
But let's look at a 5 year window. You would have got a 7% average annual return. Over a 7 year period, your money would have grown 3% average annual.
Okay.
Right? So, which means that last year you should have been able to time the market and said, okay, this is 2018, and I think gold prices will go up, and I'm going to put all my money in gold.
True.
I mean, you didn't know that, I didn't know that. Other than maybe 5 people, nobody else knew that.
And those
So
five
we are,
people are the lucky ones today.
that's
yeah.
right. So, but we are not in that league of forecasting currency
gonna happen,
markets or
yeah.
gold markets or even stock markets short term.
Right.
So for an investor, you are safer having 5 to 10% of your portfolio in gold. The rest of it, of course, is in equity funds. Equity cycles last 5 to 7 years. So if your overall portfolio has 5 to 10% of gold, you're okay. And largely, Indian households keep gold for marriages of kids, for that stability. So this is not really the time to say, oh, I'm going to be a gold hawk and gold bug and I'm going to sell everything and get into gold. Bad idea to choose last year's winner.
Right. So, what would be your advice to retail investors who are right now wary of entering the equity markets? You've talked about people who possibly are already invested, those who are investing, because there are a lot of first-time investors, especially with this mutual fund Sahi Hai campaign at a high, etc. What would be your advice to those investors?
That there is no one golden moment to enter markets. You've got to look at your monthly savings and start investing that as soon as that saving is generated, because you're going to be working for 10, 15, 20, 30, 40 years depending on how old you are.
Right.
And it's not this one time decision that you have a lot of money that you're going to go and you're going to punt in the market.
Right.
Punting is different. This is investing. It is to be done every month, and there is no one moment which is the right moment to invest.
Right.
So disregard where the markets are at.
And
You have
disregard
to
that the gold prices are what is
correct.
peaking right
Yes,
now.
it shouldn't. You
Absolutely.
shouldn't really be watching the markets. Once you've got a good asset allocation and a good plan, you're not really watching what the market is doing. You're looking at your portfolio once a year,
Right.
and you're seeing the overall direction. Just one more thing: if people are thinking of buying gold, whether it is gold or gold plated, jewelry is not what you buy. So when I'm saying 5 to 10% of your portfolio, you're not buying gold in form of jewelry or even bars, because then you have a storage problem.
True.
Your two ways to buy gold is either an exchange traded fund.
It's like an MCX or something.
No, these are mutual funds which buy gold.
Okay, all right.
Okay, it's a
Okay.
mutual fund, it's an exchange traded fund, so you're buying it there.
All
The
right.
best product is the government bond, sovereign
Oh,
gold
yes, of
bonds,
course. Yeah.
because not only do they give you a little discount on the buying price, they also give you an interest every year, which no other vehicle, no other route to gold buying will do. The next issue, the next tranche will open in September. So if you are looking at gold as a hedge against risk and you can hold over the tenure of this bond, then that is the product to buy, but no more than 10% of your portfolio.
No more than 10% of your portfolio. And for those, the festival season and the wedding season is approaching. So gold prices being at an all-time high for individual people who are buying it for weddings or for festivals, obviously is not very good news, and it's not going to change anytime soon.
Doesn't look like it.
Doesn't look like it.
Doesn't look like it.
So we
Yeah.
keep coming back to you with more. Keep watching livemint.com.